Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro market update for Sunday, 12/08/2024, although you may see it posted on late Saturday night. Title this, Markets at New Highs, Is a Correction Coming? You can contact me at marketmripro@gmail.com. Market MRI Pro is a new tool that's just coming to market at the beginning of the year. I'm using it for educational purposes only to demonstrate how I do top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make. And I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before taking trades. If you haven't joined my Google group at Top Down Trader, here's the basics. You just go to Google Groups, search for groups. Mine's called Top Down Trader. Go ahead and join, and I'll activate you within 24 hours. If you are wondering my thoughts on the market, I spend a lot of time over the last 20 years getting to understand the power of the leader index. And I use this index to help me understand how the best stocks in the market are holding up. We put this together November 24th, and it's about 40 stocks in all reality, 20 different industries plus, and they were the market leaders, and you could see leaders lead, and right now they're still going higher, and as long as the leaders index is working, this adds to my thesis of still staying long the market. Know your news and earnings. Not a lot of earnings this week, but Costco's a big one, isn't it? Broadcom, Adobe, Ollie's, Costco. You look at the PE, you look at the growth rate, you got to scratch your head, but they get really rewarded for being such a great franchise. News this week, big one, CPI, PPI, employment, among others. So there'll be a lot to give the Fed reason to pause its cuts or to come out and keep cutting. Let's take a look at what I see in the tool. So I've been trading for a long time, and one of my followers, Praveen, actually built me a trading app that includes pretty much everything I do in one tool. And I liked it so much, we're commercially developing it. And a little bit of work to do on the charting platform, but getting close to being ready to put this out there. My timing model is simple. I look at two things, the WMA, 30 period, and the bongo. And the bongo is a trending indicator. When you cross and close above the WMA and your bongo turns blue, you go into a buy signal. We've been into a buy signal since November 6th of 2023. All right, over a year. Wouldn't you like to have been long the spider since then? A run from in the neighborhood of 446, 445 to 607. Hopefully you've been long. You can see the green here tells me I've been long the spider, I'm long the Qs, long the diamonds, and long the Russell. All right. The green line is the 13-week new high, new low, using the weekly closes, and you can see we've come off of extreme numbers, taking away some of the overboughtness, except on the diamonds, which remains still by the 13-week new high, new low overbought. I can pull it down to a weekly chart and see that all of these ETFs, give it a second to flip-flop. Okay, you can see that they're all green, as are their weekly brothers. So what does that mean to me? I look at the weekly to give me the longer-term trend, certainly impacts on my long-term money. I look at the daily to give me a sense of my conviction. So I have other things that are making me a little bit less convicted, but right now my signals still say to be long the market. Notice the Russell and the Dow have started to roll over. If I go into the market briefing, I can look at some of the things underneath the indexes. Let's start with, well, we can start here. The big concern I have has really been the distance that the prices from the 50 and the 200 certainly getting extended. We have seen the number of stocks above the various indices come down over the last week as the market's weakened. We're seeing the new high, new low number come down, and we're seeing some negativity on the advanced decliner and on the up-down volume. These are Bangos, those are Hindenburgs, all signs of a market extended and at risk. This is the NASDAQ, and similar things are being seen. So a lot of things are going on in this market that are concerning, but you also got to pay attention to the fact that the NASDAQ is at new highs, and we are a week away from new highs on the NYSE, or off of them. The performance view will show you what's working. If I look at the 1 day, we were led higher on Friday by the Qs. Pretty much the whole week was the Qs. In second place on the week was Spiders. On Friday, second place was the Russell, followed by the Spider. Diamonds were negative. Volatility was down. And if we look again at the 1 day performance, and we look here, we can see leadership, technology, discretionary, and financials opposite order. Discretionary communication technology, followed by financials in fourth place, which was actually negative. Only 3 groups were positive on Friday. These are the same groups that were positive over the 5 days. So, the breadth really took a hit, and the number of positive sectors came down substantially. We saw some new lows at the 1 month time frame on the NYSE. That's a recent change. They'd all been green. And then if you look over here, S&P 1500, NYSE, and NASDAQ, number of positive sectors, about 45% on the S&P 1500, 50 on the NYSE, 50 on the NASDAQ. Positive industry groups, 46% on the S&P 1500, 46 on the NYSE, 52 on the NASDAQ. And number of advancing stocks, 23% on the 1500, 21% on the NYSE, and 29% on the NASDAQ. So you have a market that's definitely deteriorated, and on the broader markets have already started to come down. And if I look at the buckets, I get a sense of the number of stocks that are above or below the Bollinger Bands and where they sit. And we're starting to get bell-shaped curves, which just tells me that we're neither extended, overbought, nor oversold, although we have definitely shifted to the left with more stocks popping up below their Bollinger Bands. When it gets to 25 or 30, I pay attention. Right now, I see a neutral to bearish, but not bearish enough. Then I can look at my ratio charts, which look at ratio charts of the instrument versus the Spider, looking for outperformance. The only one that's not an S&P sector is Bitcoin, obviously doing well, but here's communication, here's discretionary, and here's technology. These are the leaders. Look how weak compared to the Spiders are staples, industrials, utilities, real estate, materials. I thought I said materials already. If I double said it, I apologize. Energy, financials are neutral, and healthcare is weak. So this is a market led by communications, technology, and especially discretionary. Then for my layouts here, just to give you my perspective, here are my charts. High-low, bongos, 1750, 200-day moving average. The top dot is the EMS. That's a short-term timing model. The next dot down is the CPR, which is a moving average crossover system that I use. Not a simple one. Then there's up to 4 dots, which include gaps, volume, breakouts, and momentum, squeeze, PSA reversals, OBV, and relative strength. And then over on the right, let me kill all this, kill those, is a list of stocks that I follow. And basically I use the JAS list, which I combine the NYSE and the NASDAQ, and there's 347 stocks. From a top-down perspective, I go to top-down, and what you're going to see here is a list of sectors on the left, 11 of them, 144 industry groups. I have different ways of ranking. I like to use short-term momentum that takes into account performance over 2 days, not one, volume, changes, And when I say volume, it's really relative volume because I neutralize the overall average volume. Here's discretionary, technology, and communication. Here are industry groups, and I can rank them the same way. And then as a top-down trader, there's a number of things that I can do. I can look at discretionary. And then the discretionary industry groups drop down to 20. There's 367 stocks. I could look at the short-term momentum on the 367 stocks, and right up the top comes one of the stocks that I like, which is Lululemon. Now, Lululemon has run a big way. It's getting extended, which is the problem. Is it going to pull back a bit before it goes higher, or is it going to run? Look at the volume. The EMS is strong. It's been in a buy since down here. You had a CPR buy come in over here, and you could see we had 4 dots, which means a gap up, volume, breakout, momentum. OBV and relative strength are strong. We're looking down here where you see the days since it crossed to positive, so a lot to like here on Lululemon. Now, the question, not all these are going to be great candidates. AutoZone, basing, breaking out, it's $3,000 stock. I think I'm going to skip it. Alta is another one that looks good. Broke out above its 50, and you could see the only thing I don't like about it is it closed so low in the time frame. What I'm trying to show you is the ability to identify what sector you want and then find the best stocks in that sector. Right now, I'm ignoring industry group. I'm looking at all of them in the sector. A couple of them that I looked at that I liked a lot. One of them was, looked at it earlier. Where did it go? Where did it go? Amazon has broken out nicely. Broke out above this level here. Probably had a reverse head and shoulders here. Line and a breakout, retest. Amazon looks good here. Yeah, obviously, if I show you Tesla, you're going to see a stock that's going to the moon. It's just hard for me to buy it right here. High jump at 94%. So one way is to look at the stocks in the sector. I'll show you another way. Let's turn off that sector. All right, we're back to the 144. These are all the stocks in the market, but let's look at the top industry group. It was apparel retail. No surprise, Lulu's in it. I don't know what Vasco is. I thought that, Victoria's Secret. Beautiful. Big volume coming in, gap, breakout, volume, OBV, relative strength look good, just getting extended. Boot Barn. Not so extended. Notice that it broke down, just broke out above the 50. Our earnings out, we can look at fundamentals. We're going to be adding to the fundamental list. Earnings came out. Nope, they come out January 29th. So one can go through the list and see the different opportunities. What about specialty retail? What's in that category? I hit it too many times. Just hit it once to turn it on. You hit it a second time, it turns it off. And you could see here, Ulta, AutoZone, Amazon. Dick's looked interesting. Doesn't look interesting there, but basically pull back here to its moving averages. Other thing you can do is, here's the one we looked at about a week ago. This was one of my favorite stocks. And if you remember why, I said, look, 3, but this would have been on this day here. When it had the second momentum, big kahuna signal in a row, force momentum. And then look at the move we had with MNSO. So top-down investor, you have the ability to identify the leading sectors or industry groups, the stocks in that group, and go ahead and find the stocks that you like. It's going to be hard to find stocks that have pulled back and are going at this point in the market since it's so far extended. But there's other things that we can do as well. We could go and do bottoms up. So let's go back to the impulse system. And what I like to do is, since I'm long, I'm looking at long signals, but I do think this market is getting stretched. I like to put some filters on. I want stocks above 500,000 shares traded. Brings my 33 now to 1959. I like them to be above $5 a share. Brings me down to 1651. And then I can look at various patterns. So my favorite one is that K-Force 2 days up, which looks at a very big momentum signal. We have two, and one of them is one of my favorite stocks in the market. SERV, a start pattern. Why do I like it? This is a robotics. I think you know robotics have been hot. Because it took out the 50 and the 200 here. You have volume increasing. You have an EMS signal. You have a CPR. And look at all these blue dots that just occurred in the market. And you got green OBV and green relative strength. Cheap stock breaking out. Wouldn't let it drop much below where it opened on Friday. STLA. What is this one? Stellantis, that's too beat up for me. I don't know what's going on there, but it had the momentum, but I don't chase things that are that far below the 200. In fact, sometimes what I'll do, especially when we've been in a bull market that's been up so much over the last year, is I'll put a filter on that I don't want to see stocks that are below the 200 SMA. All right, so that was one filter. Let's turn off K-Force. And you can see by adding that 200-day, we're now down to 1,000 stocks. We can look at stocks that have fresh early movement signal crosses, the EMS, which is those green dots. And might want to rank these by short-term momentum. See if any of these look good. Monday.com, a Israeli AI company. Bank of Montreal, boy, has this been a big mover. Here's that serve again. HP Enterprises looks good too. Breaking out, taking out prior recent highs. Other system that I like to look at, and this is a bottoms-up approach to the market. This is a multifunction CPR signal buy. I don't want all those hit. I would have been to kill the sell, kill the weekly bullish reversal. And you can see we have 75 of these. Dick's Sporting Goods is right up at the top. One that looked interesting was NNOX. And NNOX is a 3D printing company, used to be. And why does this look interesting? Look at the volume. At least try to figure out why it's got such volume. A lot of things here. ALAB is a recent IPO AI stock, which we looked at back here. Big move up. So these are different scanning tools that allow me to do bottoms up in the same tool as I do my top down. And then look for weekly bullish reversals requires a combination of signals on the daily and the weekly. We'll just look at coin as an example of a stock. And what you're going to see is it's got a buy signal on the CPR. And it's got a specific weekly pattern. So a number of stocks are looking good. In fact, it was really easy to find nice patterns, but it was also easy to find some shorts. So a couple of my favorites as we end this to the long side, SERV, which I showed you, serve robotics. KVYO, pullback, broke down here, breaking out, ready to go again. And Bridge Bio was another one that looked interesting to me. Breaking out above the 200. So, hope you like the review here. The challenge is there's a lot of signals that say we're getting to a top, and I'd be a little bit careful. What do I do here? It's hard for me to short all-time highs. It's hard for me to short without having without a short signal. But what it tells me is make sure I got stops, let the market take me out, raise some cash, because I have a guess that we'll be buying them cheaper before too long. Have a great week.